Today's Brent oil technical analysis reveals a critical test of the 200-day moving average at $83.98. We map exact crude oil support and resistance levels, from the 83.40 floor down to the 82.46 do-or-die line. The RSI, CCI, and 4H MACD all flag an extreme overshoot that historically resolves with a sharp mean reversion. Brent crude just collapsed 4% in a single session. The headlines are screaming about a US-Iran peace deal and the Strait of Hormuz reopening. But here's what the headlines aren't telling you. The real danger right now is not further downside. The real danger is a violent short squeeze that could rip prices $5 higher before you can blink. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 3 exact levels you can trade today. This is your instant market verdict. Session bias. We are an oversold bounce candidate inside a strong downtrend. Price is extreme. Momentum is entirely one-directional. But we are parked right on top of the most important structural pivot in the crude oil market. The single invalidation level that flips everything is a daily close below $82.50. Write this number down. If Brent closes today below $82.50, the entire multi-month support structure evaporates, and we are headed straight to 78. But if it holds, we have a high probability mean reversion setup that institutional desks are already leaning into. Here's the micro insight that matters. The herd is piling into shorts after the Iran headline. Everyone saw the same news. Everyone hit sell. And that is exactly why the market is now a powder keg for a squeeze. The commitment of traders' data shows speculative long liquidation, absolutely, but the commercial hedges, the smart money, are quietly adding length at these levels. That is a classic divergence, and it sits right on top of the 200-day moving average. The trap is set. Let's go technical deep dive. We start from the weekly chart and work down to the 60-minute. On the weekly, we have a sell signal. Price is sliced through the 20-week moving average and momentum is clearly lower. But the monthly trend is still a strong buy. That tells you this is a pullback within a larger bull cycle, not the start of a new bear market. Now step down to the daily. Strong sell. Brent crashed through the 20-day moving average at 93.64, through the 50-day at 95.40, through the 100-day at 91.56. And right now it is testing the 200-day moving average at 83.98. The 200-day is the line in the sand. It has held as support multiple times this year, and every time it was tested, buyers stepped in aggressively. Right now we are piercing below it by just 47 cents. That is not a breakdown. That is a textbook liquidity grab. The RSI on the daily is 32.8, not quite. At the 30 oversold level, but close. The MACD is deeply negative at minus 3.68. But here's the twist. On the 4-hour chart, which is the most important execution timeframe right now, we have a strong sell structure, but the momentum signature is starting to shift. The MACD histogram is flattening, no longer making lower lows. That is early-stage bullish divergence in the making. The Williams %R is buried at minus 93. That is an oversold extreme we haven't seen since the March 2023 banking crisis lows. The CCI, the Commodity Channel Index, is at minus 208 on the 4-hour. Absolute extreme. Every time Brent's 4-hour CCI has dipped below minus 200 in the last 2 years, a sharp snapback rally followed within 48 hours. I'm not saying this time is different. I'm saying the probabilities are heavily stacked for a mean reversion pop. Here's what most traders miss. When price breaks a major moving average on headline shock, the initial move almost always overshoots. The real money is made on the reclamation. If Brent can reclaim 84.34 on a 4-hour closing basis, that is the daily pivot point, and it would confirm a rejection of this entire breakdown. The support levels below us are crystal clear. Immediate support is 83.40, the S1 floor. Below that, $83 is the psychological round number and a demand zone. And the do or die is 82.46, the S3. That is the line. Resistance above, 84.34 is the pivot and the first barrier. Next, 84.88, then 85.28. If bulls can punch through 84.34, the path opens to 85.28 quickly, and then a potential run toward 86.80, where the 10-day moving average sits. On the 60-minute chart, trend is now neutral, not strong sell. That's a clue. The selling exhaustion is real. Price is coiling just above S1, absorbing every short order that comes in, but it's not cascading lower. That is absorption. That is a footprint of an imminent reversal. Now let's connect the fundamental driver and cross-linkage. Yesterday's core news changed everything. The US and Iran announced an interim peace deal with language about de-escalation and potential Strait of Hormuz reopening. The market instantly priced out the geopolitical risk premium, shedding 4% in a straight line. But here's the critical nuance. According to multiple shipping and intelligence sources, the deal is preliminary. It faces significant hurdles in the Iranian parliament, and even if signed, the full resumption of 2 million barrels per day of Iranian exports is months away, not days. The market may have over-discounted the near-term supply impact. At the same time, on the demand side, China's crude imports hit a record last month, and the US SPR refill orders are sitting right around $79 to $82. That creates a physical flaw. The fundamental picture is not as bearish as the one-day plunge suggests. Cross-linkage. Oil's collapse dragged energy stocks lower, but the S&P 500 barely flinched. That tells you this is an isolated commodity move, not a systemic risk-off event. The US dollar is steady, so there's no additional FX headwind. And gold, the fear architect, barely moved, confirming that the Iran deal is being treated as a contained event, not a macro regime shift. My 1 to 2 week directional lean is cautiously bullish for a bounce, targeting 86 to 88, as long as 82.50 holds on a daily closing basis. The invalidation is a weekly close below $82. That would signal a structural breakdown and a test of the 78 handle. I want to hear from you right now. Do you think Brent holds the 200-day moving average this week? Comment hold or break below. I'm tracking consensus and the split is fascinating. Most people skip this section. That's exactly where the money is made. Keep watching. I'll give you 3 precise trading plans for today's Brent oil session. Strategy 1. The sniper. This is the conservative play. We wait for confirmation that the 200-day moving average is holding. Entry is a 4-hour candle close above 84.34, reclaiming the daily pivot and confirming a rejection of the breakdown. Stop loss goes at 83.30, just below today's low and the S1 support, giving enough room to avoid the noise of another liquidity sweep. That's $1.04 of risk. Take profit 1 is 85.28, the R3 resistance. Take profit 2 is 86.80, the convergence of the 10-day moving average and a prior support-turned resistance zone. Risk to reward on target 2 is roughly 1 to 2.4. If a 4-hour candle closes back below 83.40 before the entry triggers, the setup is void. We stand aside, no trade. The sniper, conservative, entry, 84.34, 4H close above, stop loss, 83.30 take profit 1, 85.28 take profit 2, 86.80 risk, air reward, (1:2.4 R invalidation, void if 4H close below 83.40 before entry strategy 2. The active trader. This is the standard pullback play for traders who already see the shift in momentum. Wait for a dip to the 83.50 zone, which is exactly where we are trading right now. The trigger is a 1-hour bullish engulfing candle with the RSI crossing back above 35. Entry on that candle close. Stop loss sits below 82.90, beneath the S2 support and a known liquidity pool. That's a 60-cent risk. Take profit 1 is the pivot, 84.34, for an 84-cent gain, roughly 1 to 1.4. Once target 1 is hit, move your stop to break even and let the runner target 85.28. This setup has a high probability because you're entering at value right on top of the 200-day moving average with a tight, logical stop. The key is patience. Do not anticipate the engulfing candle. Wait for the close, then act. The active trader, standard, entry, 83.50, 1H bullish engulfing, RSI 35, stop loss, 82.90 take profit 1, 84.34 take profit 2, 85.28 risk, reward, 1:1.4R to TP1, runner to TP2 invalidation. No entry if 1H closes below 83.00. Type your Brent oil range for tomorrow in the comments now. Let's see who's aligned. I'll be reading Strategy 3. The Aggressor. High risk. Counter-trend scalp against the bounce. This is not for everyone. If we get a rapid spike to 85.28 and the 15-minute chart prints a shooting star or bearish engulfing candle with RSI above 70, that's your entry to short the mean reversion failure. Entry at 85.25, stop loss at 85.65, just above the likely session high if it extends. That's a 40-tick risk. Take profit 1 is 84.50, back inside the pivot zone. Take profit 2 is $84 even, the psychological magnet. Risk to reward on target 2 is better than 1 to 3. This is purely a fade of an overextended bounce. If the market breaks above 85.65 with volume, the trade is dead. Do not hold. Do not hope. Only for those who can lose small and manage risk aggressively. The Aggressor, high risk, entry, 85.25, 15 minutes bearish reversal candle, RSI 70, stop loss, 85.65 take profit 1, 84.50 take profit 2, 84.00 risk, reward, 1:1.87R to TP1, 1:3.1R to TP2 invalidation. Abort if 15 minutes. Close above 85.65 risk management pulse. Never risk more than 1 to 2% per trade. No positions through high impact news, especially the API inventory report due tomorrow after the close. Stops are non-negotiable. This is how you survive to trade the next big move. Here is the single most critical level for the next session. 83.40. A break below that and we test 82.50, and then 82 itself. Hold above 83.40 and the bounce targets 85.28, then 86.80. Tomorrow's wildcard is the API crude inventory report, and any new Iran deal comments hitting the wires. I will be tracking order flow all night. If you want the full breakdown on gold and the S&P divergence, that video is live now. Tap the end screen. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one. The trap is set. Trade safe.